This week, it's time for Security Money. The Security Weekly 25 Index has finally cooled off. In the Leadership and Communication segment, arming CISOs with the skills to combat misinformation. Is the Great Resignation impacting cybersecurity? Ask these 5 questions to decide your next career move and more. Business Security Weekly starts now.
This is Security Weekly, for security professionals, by security professionals. Broadcasting live from G-Unit Studios in Rhode Island, it's the show where we explore the business of security to improve the security of business. Your trusted source for actionable insights on leadership, communication, and innovation. Get ready for Business Security Weekly. Let's face it, cyber attackers have the advantage. Extra Hop is on a mission to help you take it back. Regain the upper hand with security that can't be undermined, outsmarted, or compromised. When you don't have to choose between protecting your business and moving it forward, that's security uncompromised. See how it works in the full product demo, free online at securityweekly.com/extra hop. Every 11 seconds, there's a new ransomware attack. Oil pipelines, universities, corporations, all paying millions of dollars. Barracuda says, don't pay the ransom. Before a ransomware attack occurs, train your teams to recognize an attack and use anti-phishing technology. Protect your applications, and they can't get onto your network. Simple backup and restore solutions quickly recover your data without paying the ransom. Build your ransomware protection plan now by visiting securityweekly.com/Barracuda. That's securityweekly.com/Barracuda.
Welcome to Business Security Weekly. This is episode number 246, recorded January 14th, 2022. Yes, it's a Friday. This is part of this new, we're not going to skip a Monday due to a holiday segment. I am your host, Matt Alderman, here in Colorado. Joining me remotely are my co-hosts. First, Mr. Ben Carr. Welcome, Ben.
Hey, Matt. How you doing today? It's a pretty
Happy
nice day
Friday.
here in Texas. Hopefully it's good in Colorado for you.
No, it's snowing.
Yeah, well, sorry. Sunny and like 65, 70 here. So
I'll be there next week. And joining me this week for this segment is Lee Neely, stepping in for Jason Albuquerque. Welcome, Lee.
Well, it's good to be here. I'm enjoying the Friday. It's still nice and brisk outside, but it's not actively snowing here in Idaho, so life is good.
Good. We'll see if that remains, but yes, a little snow here in Colorado today. Don't miss any of your favorite Security Weekly content. Visit securityweekly.com/subscribe to subscribe to any of our podcast feeds and have all the new episodes downloaded right to your phone. You can also join our mailing list, Discord server, and follow us on social media and our streaming platforms. We had an absolute blast putting together this year's Security Weekly Unlocked virtual event. All presentations are now available on demand for your viewing pleasure. Please visit securityweekly.com/unlocked to register and watch now. All right, since we did a kind of out of sequence show for the holiday, we decided that we weren't going to do interviews on these segments because it gets a little hard to coordinate. And so I said, oh, this is perfect because I needed a slot for my Security Money show in the first quarter because it's full of interview segments, I think, the rest of the month. Now, Lee, you haven't been on the show before, so let me give you a little background in history, and it'll help anybody who's seeing the show for the first time. A little over 3 years ago, when I started at Security Weekly as a CEO, I thought it would be interesting to kind of track the cybersecurity industry. And I had this concept. It was right after Tenable went IPO. I was like, wait, I think I can create like my own index to like track the cybersecurity pure plays. And so I created what I called the Security Weekly 25 Index over 3 years ago. I have over 3 years of data that I track every quarter. And what it does is it tracks the pure play cybersecurity vendors. So for example, Cisco is not in my index because although they do security, they also do a lot of other stuff. And I didn't want some of those vendors to skew the kind of the more pure play cybersecurity vendor structure. Now, as you can imagine, the index is morphed because here's what happens. It's actually kind of interesting. We're going to talk about this in this segment a little bit. Company goes public. 2 years later, they go private. So I got to adjust the index. I think I've adjusted it like 4 or 5 times, Lee, over the past 3 years because companies keep coming in and out of the public market. And so every time that happens, I have to make adjustments to the index to keep it consistent over the long haul. So that's a little bit of the history of the index.
So did you have to adjust when Norton picked up LifeLock, or was that already done 3 years ago?
The Norton LifeLock one was actually pretty easy because when Symantec switched to Norton LifeLock, the ticker symbol changed, but all the history for the Symantec pricing stayed. And so that was a really easy switch. Here's the ones that really caused grief. So Sophos was on the London Stock Exchange and then came off. And then I had to replace Sophos on the list. Mimecast is on the list, but they're going to come off the list because they're going private. This has happened a few different times where, some like Mandiant and FireEye is the same way. The FireEye symbol changed to MDTT for Mandiant, but all the FireEye history stayed under the Mandiant ticker symbol, and then when they split off FireEye, so it didn't have as much impact as a company that literally is public and goes private, because now I have to replace them.
Right. So as with the change to Mimecast coming along, have we got somebody in the wings, or are we going to have a gap for a while?
We're going to talk about it right now. So let me give you an update on the public markets, because it gets a little interesting. So I didn't make any changes to the index this quarter because although the Mimecast announcement's out, they're still actively trading on the public market. So yes, I will have to replace Mimecast next quarter when I do this update. And it's a royal pain in the butt, but it's okay. It's good data to have. All right. And I'll tell you who a couple of the potentials are when we get a little deeper into the segment. But let me give you just a quick summary. So the index closed at 2226.93. Now, Lee, when I created the index, I baselined it at 1,000. Okay. So it's a weighted index. The original index started at 1,000 when I started it 3 years ago. So it's at 2226.93. So that's 122.69% gain.
Yeah.
But last quarter it was over 3,000. So the market's cooled off. And in the graphs that I put in the show notes, you'll see the kind of the spike, and then you'll see that the market's kind of corrected here. It's backed off a lot over the past few weeks. And so the index hit 3 records in a row, Lee, the last 3 quarters, but really cooled off this last quarter.
Yeah. But it's still up overall. So now don't we have then what do we do? Do we hang on and see if it comes back, or do we adjust, right? That's where we're thinking.
That's what everybody thinks. So I'll get you to some specifics on that in a second. Now, the second thing I do, Lee, is I track the NASDAQ, because the NASDAQ is where most of these companies are traded. Sentinel-1's on the New York Stock Exchange, but most of the stocks sit on the NASDAQ. So I also baseline the index against the NASDAQ. So the second graph in the show notes will show you the comparison of the index to the NASDAQ over the same period, okay? The NASDAQ closed at 14,806.81 yesterday, which is an increase of 123.51%. So notice that. They're pretty close.
Yeah.
The Security Weekly 25 Index, when it's going up, usually outperforms the NASDAQ. When it goes down, it usually underperforms the NASDAQ. And so they've kind of caught back up with the market corrections. But the NASDAQ hit an all-time high of 16,057.44 this quarter. But the index did not get over the previous 3,033 close last quarter, or whatever it was. So the NASDAQ did get a pretty big spike during the quarter and then settled back down to where it is today based on yesterday's close.
I was actually looking at the graph in the show notes and was pleased to see how really, even though they it underperforms, as you said, when it went on the way down and outperforms on the way up. They're not that far apart.
No, they track pretty close. It's actually impressive.
Yeah. It is. But that's, again, because we are a subset of the NASDAQ. But it's just interesting to see at certain times where it outperforms and underperforms the NASDAQ, because the NASDAQ is a much more holistic tech kind of index. And so at times we perform better and at times we perform worse.
Yeah, I think a lot of people would think it would natively perform a little bit better, but it does mirror it pretty closely. It's a good indicator there to think about when you're thinking about in the holistic sense for security.
Yeah. The other thing I do, Lee, is I go through all the earnings reports every single quarter. I track revenue, earnings, ratings. So I have 3 years of all this data, and I like to see how all these compare. So, for example, revenue beat by 2.72% on average. So that means the analyst expectations for the 25 stocks, we actually outperformed by 2.72% on average. That's a little bit down from last quarter. I think we were a little over 3-4% above revenue expectations. So it just gives you a gauge, like, are we meeting market expectations or are we exceeding them? The one that's more interesting to me is earnings, because earnings beat by 47.85% on average this last quarter, and that's up. And when you think about it, that means these companies are becoming more profitable, which is a good sign for our industry, because a lot of companies that come out of the gate in an IPO, Tenable was like this, CrowdStrike, a lot of them, when they first come into the public market, they have negative earnings, as in they're not profitable yet. And you kind of see them track over a year and a half to 2 years to get to a profitability state. Qualys is one of the few exceptions that I remember being like profitable from day one when they hit the market. Yeah. And so it's interesting to see, like, our earnings expectations continuing to go up, and they are, which is good. That means that the companies are building more financial strength in the public market as they continue to grow. So I think that's a really good measure.
I was actually surprised as strong as it is with the crappy year we've had for businesses. I mean, that was like very impressive.
Yeah, but see, this is where cybersecurity is so interesting. This is why it was on such a tear for 3 quarters in a row, is even though businesses were struggling, cyber attacks were
didn't
still
feel the
ongoing.
impact.
Right.
Yeah, we were still seeing sales happening, and you're still seeing a lot of traction in the market. So I'm actually surprised that it went down from the high, and we didn't see it back up a little higher than where it is now.
And I think it's because of some of the inflation concerns and interest rate concerns. When you think about the macroeconomics that are going on, inflation, interest rates kind of impact all the tech stocks, kind of all as a basket. And so as the NASDAQ moves, some of these other stocks move. Now, there are outliers to the decrease, by the way, in certain stocks. Like CrowdStrike still performs pretty well overall in the market, even with some of these bumps. They take a little dip. That's a buying opportunity, and then it goes right back up. So again, it depends. But yeah, there are some blips in here that have to be addressed. The other thing I track is the analyst ratings. It is the market is still a strong buy. It's a 1.7, which is considered a stronger buy signal. 2 is a standard buy. Anything less than 2 is a strong buy, is a 1.5, for example. So we kind of sit between a buy and a strong buy for most of these stocks on average in the list. Best rated are companies like Verint and Tenable and Rapid7 right now. They have the best analyst ratings overall. The worst rated stocks are SecureWorks, Checkpoint, and Mandiant right now, based on the analyst ratings. That's kind of how the analysts see the market and who they're placing their bets on and who they're not. Best performing stocks I always track, Ping, Identity, Tenable, and Varonis. Ping's been on this list multiple times. Paul and I actually did an advisory session on Wednesday. I've just seen Ping as a strong performer in these quarterly reports. Ongoing. Tenable over the last couple quarters has done really, really well in overperforming the market. The worst performers are Cloudflare and NortonLifeLock. Now, NortonLifeLock doesn't surprise me too much because they're more consumer based, and I think consumer spending has kind of come back. It's kind of ratcheted back a little bit with what's been going on in the world. Cloudflare was interesting because the advisors specifically asked about Cloudflare, and they're like, "Do you guys see Cloudflare?" And I'm like, "Well, for CDN and WAN acceleration, yes, but not as a pure play security. Even though they have security offerings, I don't see that many people buying Cloudflare for their security products. I see them buying something like a Fastly with the Signal Sciences capabilities embedded, not really Cloudflare. And Cloudflare really dropped off this last quarter in their performance.
It seems like their core business is really the accelerator, not their security product. And I'm wondering how long that product's going to last.
Agreed. It's the interesting part. That's what the financial analysts wanted to know too, Lee.
Yeah, and I know they had a couple impacts last quarter from availability, so that was pretty interesting too.
Yeah. Now let's talk IPOs, because these, Lee, are the potential replacements when Mimecast comes out of the index. Because new companies are coming into the space. Now, couple nuances. So the first one, Git Lab, we covered last quarter, but I wanted to update it because Git Lab went public on October 14th, right before I did my last Security Money segment. Came out on the NASDAQ. Offer price was 77. It opened at 94 and a quarter. It closed at 103.89. It closed yesterday at $65.53. So let that sink in for a second. It is now below its IPO price. 3 months in. Kind of weird.
Yeah.
The second one that came out in Q4 as an official IPO is Hashicorp. So Hashicorp came out on December 8th, also on the NASDAQ. Offer price was 72. It opened at 81.16 cents. Closed that day at $85.19, but it closed yesterday at $66.97. So you can see that even the IPOs that came out in Q4 are also kind of caught in this kind of downtrend of the market right now because their stock price is below their IPO prices.
And who knows? I guess good thing you got a little time before you reset the index to figure out which one to go.
Right. And there's a couple others, Lee. So KnowBe4 is in the index. Dark Trace is not. Dark Trace went IPO back in Q3. Sentinel-1 is not in my index yet because I had CrowdStrike and a few others in there, and I didn't want to overweight to the endpoints too. So I actually have a few options. Plus, there's something else that happened. ZeroFox went public through a SPAC, which is kind of an interesting way to go onto the market. It's not an official IPO, but they are now trading as a public company because they went through through one of these SPACs to get there. IronNet did this last year as well. So there's been a couple companies. Who was the other one? The Denver-based company also did this through a SPAC. Like they just kind of come on and start trading on the market without all this hoopla of an IPO. So there are a few other companies that trade publicly that could be really good replacements in the index. And when I do it, Lee, I try to balance the valuation of the exiting index to it, because if I change the valuations, because it's a weighted index, if the valuations don't closely align, it potentially skews the index a little bit during that transition period. So I try to balance that out. So I'll just have to see, what's Mimecast valuation when they exit the market, who's roughly at that valuation, and try to keep it a little more steady state. So that's some of the things I have to do to make it work. Couple of other key highlights that I just want to note because I think they're interesting. So McAfee gets acquired by an investor group, less than about a year after they re-went to the public market. So
yeah, about that.
think about the McAfee history here. They go public as one of the first early IPOs. They get acquired, which was a huge, like a $12 billion deal, one of the best deals at the time. Then they go public And then they get acquired again. Like, they've been on and off the public market at least twice through their history. And then they're going to get combined with FireEye. So this investor group then buys FireEye, and they're going to merge the two companies together. So this is just crazy when you think about it. Take two public companies, take them out of the market. In the case of FireEye, keep the Mandiant part, but take the FireEye products, and then merge them together as a new privately held company.
Yeah, McAfee's really been all over the board. It really has. I mean, I have personal history with McAfee, and it's always strange to think about where they've come from and where they are now.
Right. Then Norton LifeLock and Avast are merging, right? So again, think about this for a second. You had an antivirus product with Symantec. You spin off Symantec, sell it to Broadcom. You keep Norton LifeLock, which has some of the parts, and then you merge it with Avast. Like, it's just kind of weird to me. Like, don't you already have some of this capability? Why merge with Avast? Anyways, so just some weird kind of things that you see happening in the market. And then obviously the Mimecast coming out of the public market. McAfee was $14 billion. The Mimecast deal is around $5.8 billion to go back private. Yeah, kind of crazy. All right, Lee, the last thing I track funding. So this is interesting. I got to tell a story here because it's kind of funny and sad at the same time. Enterprise Security Weekly tracks funding announcements every single week. They track funding, mergers, acquisitions, IPOs, product announcements. Adrian running that show now. They do this every week, literally, right? And I think you've joined ESW, Lee. So you've probably been on some of those segments where you talk about the latest funding, right?
Mm-hmm.
So guess where I pull all my data from? I go to Enterprise Security Weekly. So when I prepare this show, I go to all the ESW segments from last quarter, and I summarize all the funding acquisition announcements that Adrian covers on the show. And the reason I bring this up is because every once in a while, somebody sends me a report. Hey, here's all the funding that happened last quarter or last year. We should think about these as being prospects. I'm like, you guys know we do this weekly, right? Like, I don't need to wait 3 to 6 months for somebody to write a report about it. We cover every week on the show. Like, just go listen to our ESW news segment and you'd already have this information. Anyways, kind of funny and sad at the same time. So I listed out all the funding announcements, and I want to highlight a couple because Lacework took $1.3 billion. And Adrian even said this. Yes, the round was $1.3 billion as a single round. That is huge money in a single round.
That is a crazy number.
Yeah.
Yes. Remember when, was it Sentinel-1 took like 800 million? Something like that. I mean, somebody took like 800 million. I think it was Sentinel-1 or somebody right before they went public took a big number, but I don't remember seeing a single round in the billions, which is nuts. Orca Security took another $550 million. They've been on a raising spree the past few quarters. I mean, Orca's been in this list a couple times.
Mm-hmm.
Clarity, $400 million. ReliaQuest, $300 million. Wiz, $250 million. Devo, who we know really well, $250 million. Dragos, $200 million. Cato Networks, $200 million. Aura, $200 million. I mean, right there, you're looking at close to $3 billion. And I haven't even gotten to the other rounds yet, like all the ones under $200 million. It's nuts. The money that's pouring into the space is absolutely obscene. It's crazy. Crazy.
It's going to be a real exciting time for security products with that kind of influx of money. I mean, holy moly. I mean, like, what is Lacework up to? Right?
Yeah. going after cloud and app and all the components. You've got some blockchain technologies in here. You've got critical infrastructure vendors with Clarity and Dragos in here. What you're seeing is kind of the evolution of where innovation is starting to happen in certain aspects of the space, which I think is exciting. I like to see where these different vendors sit on the radar. But I mean, this was a huge funding quarter, well over $3 billion of money coming into the space last quarter. It's big.
Have you looked at any of the spacing between the rounds, Matt, to see like if that's shortening up? Because I've seen some companies that I've been surprised that they've been getting. It seems like they're going, B round to C round really quickly now. So I just didn't know if you had any of that data or if you've looked at it yet.
I do have the data because I do this every single quarter, Ben. I can actually go back and look, like when was the last time Orca took money and how much was it? And did they take money before that? Because I remember them coming out of the gate pretty strong with a big Series A. I think it was close to 100 million in their Series A, right? And so Orca's probably this. I think this is their third round, but I have the data. I just have to go back and look at it.
Yeah, it'd be interesting to see if if the rounds have been getting bigger, and like what the velocity of the rounds is over the last 3 years. It'd be really interesting data to pull.
Yeah, maybe next quarter when we do this, I'll run some analysis across a few of these vendors and just kind of get an idea for that. Like, because Ben, when we first started this, like a Series A was like 7 million.
Yeah.
Now, right? It was like 7 million.
Yeah.
A's are now like $20+ million.
Yeah.
They've escalated. Like, you don't raise $7 or $8 million anymore as an A. You're raising $20+ million in a Series A. So I don't even track anything below 20 million on this list that I do every quarter because it's like it's probably a seed round. Seriously,
yeah, exactly.
That's how crazy it is. Yeah.
Yeah, the money has just gotten ridiculous. Yeah.
Yeah. Some of the acquisitions. There's a couple interesting acquisitions in here I wanted to highlight. Invicti got bought by Summit Partners, which is a private equity firm that was Faru and the team. Invicti is the NetSparker and Acunetics teams. We know them very well. That's a great acquisition / investment funding round for them because that allows them to grow. Help Systems made 2 acquisitions, Fish Labs and Digital Guardian. This is on top of Digital Defense. They've made a ton of acquisitions. Like Help Systems is like gobbling up a lot of pieces.
Yeah, they did.
They got core security. They have
some
what was that attacker
secure
tool?
File transfer stuff that they got. Yeah.
They just keep buying stuff. The Secure Circle acquisition by CrowdStrike. Paul and I were advisors to Secure Circle. They were a former sponsor. I love this acquisition, by the way, because this gives CrowdStrike the ability to build some data security protections directly into their kernel module. I think this was a great acquisition for them because as data security gets hotter and hotter, I think this is just a really good fit. Let's see. Tenable bought Acurix, which again, I knew that's my former CEO over at the Layered Insight started Acurix. So that was a really nice exit for them to get acquired by Tenable. Let's see what else is in here. Soluble, which was Richard Syerson's company, got acquired by Laceworks as part of that $1.3 billion funding announcement. So just some really interesting moves by some of these companies to acquire capabilities. You're starting to see, some of these pieces start to consolidate, which I kind of like because, Ben, as you know, as a CISO, you're trying to scale down the number of vendors you have, not expand the number of vendors you have.
Yeah, 100%. Yeah, it's so true.
Well, the interesting thing about some of these acquisitions is also, I would say then you might want to, look at the motives of the parent company if you're already a customer and to see where your his future may lie, and if that introduces some interesting risks for you.
Absolutely.
Are you going to no longer have a product, or have their priorities changed so they're no longer going to be heading along the way you want to go? That kind of thing.
Yep. Exactly right. There was one spin out. We don't cover spin outs very often because it doesn't happen very often. But LogMeIn has decided to spin out LastPass, which was kind of interesting. I am a LastPass user. Paul is. A lot of us at Security Weekly use LastPass. We like it a lot. It's been under the LogMeIn umbrella since like 2015, and they decided to spin it out as its own separate company. That doesn't happen very often.
No.
But so that was just another interesting highlight in the market. All right, that's a wrap. That's Security Money. We're going to take a quick break and then cover the leadership and communications articles for this week.